So, Jerry Gidel, how are you today? So, what do you think about those corrections we have seen the last week on both corn and soybeans?
Well, we came in this week with lots of enthusiasm from the USDA's final report, things of that nature. We had a long weekend, which always is an interesting thing in the commodity world. Long weekend seems to always have an opportunity, maybe to add a little bit of a twist to it. This time around, it was the weather in South America. We had very good moisture coverage and amounts across both Argentina and much of Brazil. And so, in that situation, we ended up having a market take off a negative route earlier this week, and then with limited kind of information from the USDA, because we did have a Monday holiday, so we didn't get the exports, and then we had an inauguration, and that's so some of the data, like this week's export sales on Friday, were very good, but by the time we got to them, the market already got very nervous about things and took quite a tumble at the end of the week.
And how much do you think that is related to the new projections for the Brazilian crop?
I think it has something to do with it. Definitely, we started to pick those up on both Wednesday and Thursday. Even a few more of them come through. Instead of numbers below 130 here on most of the private forecasters down there in Brazil, they all kind of seem to coalesce around the 132, 133, maybe down from the 34 or 35 numbers we had earlier this year. And so that definitely didn't help the mental attitude of this market from the standpoint of anticipating that some of the weather we've had to this date maybe had a higher impact. And to some extent, that's still left to be known at this point. I don't think anybody in the U.S., when we had some of our bigger numbers back in August, thought we were going to have some of our yields back off. Now, I can't say that nearby forecast really tells us that they're going to have a dry streak like the U.S. had August and September, but it's early in the scenario, and I think to some extent the other reason I think this market got a little nervous in the fact that we just weren't going to have a lot of new information here to it after those specific estimates came out from various consultants there. We weren't going to get much of an update here until we got to the third or fourth week, or at least halfway through the month of February into the latter part of February, before we get any kind of respectable sizes of harvest in Brazil. And to some extent, the possibility of those being a little less than the trend at the end of the year seems logical. But at the same time, without any additional information coming in, the investor world decides that maybe I better put a stop under my long position, and that's really what hit us on Friday.
So, do you think the market is headed to a wait and see mode?
Yes, I do. I think there's a little bit more wait and see as to what's really going to transpire in South America. And that now I know that we've got some substantial numbers here of sales on the books and that type of thing. I was just getting that finalized here ahead of our talk today. And actually, with the 2.1 number of exports that we have on the books, we're up here 93.5%, 94% of the USDA's number, which tends to say, oh, we're going to have to go higher. But the one thing you got to remember is that with this crop coming in very shortly, in reality here, we're close to the real strong beginning of within a month here, 4 weeks of that starting. The world usually kind of flips over and decides that it's going to be picking up its soybeans from someplace else. And so the possibility of picking up a lot of additional U.S. sales is going to be, somewhat reluctant to have that happen. Last 2 years, that wasn't the case because we did end up having limited fall sales and shipments out of the U.S. and that. And then we did pick up some things at the end of the season here in the U.S. in August, but that's not likely the case this year. We're just going to be picking up our kind of normal Central America, longtime client type business the rest of this year. And so I think that's a real factor in this thing. As somebody pointed out, and it's some of those numbers that you don't really think about when you compare metric tons against bushels. The 132 number metric tons in Brazil, and let's just say a quick, easy number of 48. You put that together, that relates to 7 billion bushels. The U.S. crop this size was 4 billion, 100 million. So that's a stark difference in the fact that the total supplies being produced in 2 countries in South America are pretty substantial. So that's a factor that's going to come into this thing. I think there is going to be some uncertainties. I still think that the crop size in South America is not completely determined, but we're going to have to really get things cooking on weather down there to put some scares that we're going to take this number down maybe closer to 125 or something like that in Brazil at this point. We've had a significant setback here with beans moving down towards the $14 mark. From there on this thing, the $13 mark on this market, and so to some extent we could be in a little bit of a sideways game here potentially. As we try to get this figured out on the soybeans, and the same thing on corn. But I'm just saying that right now we're going to have to end up having some pretty significant fundamental numbers and concerns about weather to get this thing back to the recent prices and that. But I think there's some other things longer term in this thing that is still going to make it a factor in the U.S. as we look forward into the 2021-22 year.
But even though the prices are lower, I think the prices are still profitable. Are you still recommending to sell?
Well, that's it. I had been a scale-up seller going up in this thing all the way along, and I'd hoped to see us getting maybe a little bit more sold here after the report. We got very close on corn and a little further away on beans. And that, yes, I'd like to see some minor recoveries in this thing, and I think that's possible after the kind of setback we've had. But at the same time, I'd have to look to maybe get closer to that 90% level if we ended up seeing soybeans back up into the magic number that kind of set this thing on its defensive this week, by the way, was the very steep uptrend line at $13.65. That happened on Wednesday, and it popped back up about on late in the session. It stayed a little stronger on Thursday, but once we took out that 1350 number here on Friday on nearby March beans, that was really that's the one that really tipped it over the side, along with the corn, by the way, the $5.15 level in corn, same thing. Both of those numbers were kind of midweek support levels, and once they can slip back, and that really actually came back after these really good exports that we did have, and they were at or above expectations. That really came from one of the midday updates on weather that we had here in the U.S. We got the European model, we got the U.S. model, and they're cranking out things, and 11 a.m. Chicago time is one of those times where there's an update on the U.S. model that comes through. And to some extent, it's highly important this time of year that what could be happening in both Argentina and Brazil here in the coming week is important. And last week even added to that concern after we had the above expectation rains on last weekend.
You mentioned the long term, and what do you think will be the impact of these new energy policies, especially for corn?
Well, that's an interesting one, and the energy policies I think are going to encourage higher ethanol participation, and that I think there's going to be a 15%. There's going to get more money to the out there for various smaller producers, or excuse me, smaller retailers out here in the U.S. that to put in the expensive higher cost of mixing pumps, which in reality is you end up be able to have 10%, 15%, higher percentages than that in ethanol, and that without that structure in the U.S. And the most of the majors, and it's just not. This is not going to come from Exxon or from BP or people like that. They're going to end up kind of holding the line because that's their stations and they want to sell more gasoline. But at the same time, the economic pressure from the independents selling more gasoline of 15%, and it's a bargain on cost, and also I think it's a bargain on mileage. That extra 2 or 3% that the majors want you to makes it feeling like it's dangerous to your engine really helps your octane value, and you get a higher miles per gallon situation. It's not much, but it's at 1.5 to 2 miles per gallon, and that ultimately goes further along in your dollars for the consumer. So I think that's what's going to happen there. The one tricky thing is also the environmental attitudes of the that's been kind of talked about, and that joining the climate change group again, and then also maybe a little tougher EPA regulations on chemicals and stuff like that. That could be the other side of this administration. That's the kind of balancing side, maybe encouraging, more ethanol on one side, but at the same time, they might be a little tougher on Roundup Ready and some of the chemicals that are out there. Interestingly enough, if you look at the total science over the years, they haven't ever really proven some of the issues about danger to human population or even to the quality of the grain. But unfortunately, some of the court cases in the U.S. has not been decided the same way. So it ends up that it's an interesting world. That's the other side of the coin that's going to be a little bit maybe detrimental to the U.S. agriculture. But at this point, I think that those kind of ideas and situations probably won't be front burner here right now. We've got COVID issues. We've got getting the economy going, things of that nature, and even to some extent the relationship with China and how we. It looks like that we're trying to come with the approach that we want to get our allies with on the same side with us and not fight with them too. The Canadians, the Europeans, and that, and make sure that they are willing to be a part of this confrontation with China. And I think that will be maybe a little different approach than the previous administration.
Yes, you mentioned COVID, and I want to ask you about another commodity. Do you think there was a significant correction on wheat, and how do you think things are going to evolve for that commodity?
Wheat has a setback. To some extent, I think the one thing that's happened in the wheat market is not so much that there's been a problem in supplies maybe getting tightened up, as just the fact that wheat is a human consumption grain, and so it becomes a little bit more of a what's happened in this case concerns about supplies for your own nation's food supply. And that's what's happened in Russia, that they feel like that they need to protect some of their exports. And since they're one of the biggest world providers to other countries, they are one of the leading exporters of wheat, and that they have taken that stand in that area. There's concerns that maybe Ukraine would join them. It doesn't sound like they're going to do that. There's even been talk in the corn world, both Ukraine and possibly even Argentina may be considering restricting or come up with different exports on the corn side. Right now, at least, I think the biggest thing that's in the wheat market coming up is how does this winter situation impact the U.S. on its plantings of wheat and also its yield potential at this point. If you look at the U.S. drought monitor, it's a scary situation. If you just take the Colorado and west, right across, from north to south in the U.S., that's a pretty ugly looking drought situation. And there's indications it's now even started to push into the northern plains and even parts of western Iowa and that. And this is not the time of year where you get a lot of replenishing of the subsoil moisture. Now, it's always important to get snow and that kind of stuff, but snow doesn't have this moisture, and also at the same time, it doesn't always get into the ground. It sometimes runs off faster than it gets in the ground because of the change in the spring. So, that's really, I think, the one subtlety that's I've picked up here in the some of the long-term weather forecasters that I've keep an eye on, and they have been kind of saying, oh, this isn't like 2011 to 2012. It's really not the same setup, things like that. But they're also starting to feel like that things are starting to maybe change enough that there could be a factor of things that could develop to have some impact there. And so that's the tricky thing on this, because really after this year, we have really tightened down our carryover stocks. And that I know that one of the other things that maybe popped up this week was a prominent U.S. Consultancy out of Memphis, Tennessee, came up with some pretty interesting sets of new acreage numbers after the USDA report here. They jumped up corn, 2.5 to 3 million acres, and beans were still going to be up there at nearly 7 million higher, and wheat was going to be lower, and all these small grains are going to be lower, and cotton was going to be lower, and boy, excuse me. The corn number particularly grabbed a lot of people's attention. I don't know if that specifically added to the setback in the corn prices this week. I think they're all tied into that stop loss situation at 515 from there. But it's something to really pay attention when it gets down to it in the U.S. U.S. farmers, if they have a relationship of 3 times to 1 on their corn yields versus their bean yields, they have a hard time switching over to beans. You've got to be in a situation where the price has to be significantly higher than the 3 to 1 ratio there to get them to really move over. I think we're going to have an expansion, by the way, in those bean numbers because of the fact that the northern plains is really backed off in their plantings of beans because of their planting issues. And that's where we're going to get the big jump in, by the way, on beans. But that's a real factor as we look at things going forward. The interesting thing is that we are kind of approaching some of the classic kind of retracement levels in this thing. We'll see how this thing kind of comes about. On the soybean side, right around we got down into $13.14, which takes us down to 382 retracement of this $2.90 rally we've had since back in December. And then that actually the 50% number comes in at 1290. So I think that's going to be the quite important one here looking for us on the spot nearby March. I think that's going to be a real strong possibility of stability and see if we can get a bounce back up into the, as I said, 365 to 390 range is not impossible here on the beans on the March. On the corn side, the 382 is just below the $5 mark here at 392, and the 50% number is at 378. So keeping those in mind for people out there to watch these markets to see how support is. I anticipate some stability off of those areas, and as we go there, now we're going to have to figure out how big a bounce we might be able to get here. But the key thing short term is how those numbers kind of stack up for us here in the two corn and soybean numbers.
Very sharp, Jerry Gidel. Thank you.
You bet. Have a good day, and we'll look forward to another interesting week next week.
Okay.